Hey everybody, we're going to go over our Forex trades for today, February 5th. Another busy day, so let's get to it. Not much on the economic calendar that I could think about. There was more news keeps trickling out from Greece. Greece is making some concessions now. Now the ECB is making concessions on some of the debt. Our question then becomes, well, if you're going to make some concessions to Greece, the ECB, that is, are they going to make concessions to Italy, Spain, France, and any other countries in there in the eurozone that they've helped bail out of economic conditions? I don't know. But let's get to, because we had another very crazy day. 7 trades, pulled out 27.5 pips. We had a whole bunch that were euro to US dollar and euro to pound that were correlated trades. So you're going to see them all here. You won't see the exact correlation on one chart, but you'll see all the euro US dollar trades as you're looking at here. And you'll see all the euro pound trades. And then we had those are all full positions. You're not taking a ton of risk when it comes to correlation. Basically, we get the signals to either go long or short. One of them, you do the opposite with the other, and that they're so highly correlated. And when those correlations get stretched, the theory is they'll come back together. It'll work a lot, and the risk isn't tremendous. The risk is that correlation, not that it stays wide, but the risk is if the correlation was to get wider, and then you have to cut your loss sooner or later. But if you look out over history of time, you'll see how highly correlated they are, and when that correlation gets out of whack, you try to take advantage of that. So it's not that it's riskless trading, but it's a lot less risk than just doing a one-way trade. So those opportunities don't always present themselves, but with the current volatility levels the way it is, the opportunities have become a little bit more often. So let's look here. Euro US dollar, we got a signal to short 1.13809. We picked up 35.4 pips on this trade, and you'll see the correlation with the euro pound on the next chart over that we were long was here. We were long at 0.74857. We lost 17.3 pips. So between those two, you headed a game about 18 pips or so. Next signal we got was a short of the euro US dollar 1.13322. Picked up 25.8 pips on that. At the same time, we were short euro pound 0.74639. We lost 20.8 pips there. So you're talking 5 pips on the plus side. And then we had another signal right prior to shutting things down for the night, to going long euro US dollar 1.13564. Beautiful run. We came into the office early this morning ahead of the interest rate decision from the Bank of England, and we were getting, it was about 6:30 in the morning. We wanted to see if we would get out of the position ahead of that news. Preferably, that's what we wanted, and it worked out nicely. We picked up 77.2 pips on that long trade, and while we were long that, we were short euro pound 0.74548, and you can see there we lost 59.6 pips on the short side. So we're up 17.6 pips there. The reason is, today it looks easy because all the euro US dollar worked out and all the pounds didn't work out. So you could say, oh, why didn't you just take the one-way trade? Well, we don't take the one-way trade because, again, it's a correlation, is the theory. And if one of these trades are wrong, then this trade is going to be right, as the theory goes. It could happen where this trade is wrong and this trade stays relatively flat, and then you can wait. You have options when you're correlated. You know your risk limit. As long as in this case, as an example, let's say one of these trades was going the wrong way, and this one of these trades was staying relatively flat. As long as the one that's going the wrong way, it doesn't exceed your risk limit, you're fine. You're still within your boundaries. That's the reason of doing the correlation. It's the biggest risk is if they were to both go against you, meaning the correlation gets wider and wider as you're in it. So one is your timing was wrong on the correlation, or two, you're in a trade with an anomaly where the correlation is getting wider than it's been, say, in the past, several months, 6 months, a year, whatever you're looking back time wise. So the odds are in your favor that it's not going to be an anomaly, and you just have to have your timing right. So you're taking a lot less risk. So anyway, so we had those 3 trades, and then we had a full scalp here on Australian dollar, Japanese yen. We had the signal to go long 91.793. Ended up being a false breakout, reversed on us. We took the loss of 13.2 pips on that trade. We were up somewhere around 40 pips heading into this full scalp trade, so we weren't going to risk, say, 30 pips. We didn't even want to risk, half. We didn't want to risk 20 pips, half of what we were up. So we gave it 12 pips or so, 13 pips. So we took the loss of 13.2 pips. So still ahead of the game, 27 pips. Not bad at all, pretty good. We are still in the New Zealand dollar, US dollar, which we spoke about yesterday. We're still in this, as you see, it hasn't done a whole lot. We still have 2 open orders out there. One on Euro Yen, which was a new signal today, and one on US dollar Japanese Yen, which was a signal from a few days ago. They haven't really done anything. We haven't gotten filled, and they haven't gone past what would be our out. So we're going to leave them as open orders. And that's it. We do have we also have a pair on a correlation pair of Euro US dollar to Euro pound, which is working against us within the normal range. So we're gonna monitor that and see what happens there. And that's it. We're gonna wrap it up. Any signals come out? Like I said, there was a signal earlier a few hours ago. So if any new ones come out, they'll be coming your way. If you're trading now, good luck. And we'll be back tomorrow, assuming we get some action. We close some trades. Tomorrow's non-farm payroll, first Friday of every month. Non-farm payroll, 8:30 in the morning. Basically, the unemployment numbers. Huge number, especially this month with all the stuff going on in Europe and all the arguments or whatever you want to say, the different theories of our economy here in the States. How is it good, bad, whatever. So tomorrow's a huge number. It could prove some people wrong or right. But then again, I mean, the government, you don't know. We all know the unemployment is not what they're reporting. The real unemployment is not what they're reporting. But it's what they're reporting. So you have to go by it. You have to live with it. So we'll see. We'll see what that number comes out. It could spark a rally in equities. It could spark a rally in the dollar. It could spark a sell-off in the dollar. It could spark a sell-off in equities. No one knows what that number is going to be. So you just have to, you have to be just ready and react on it. Or if you're not in a position, don't react and just let the market digest that news. So we will definitely not be scalping that number, as you know. We don't do that. We let the markets digest the number before we do anything. And that's it. So we're gonna wrap it up. So have a great evening, and we'll be back tomorrow, assuming we get some action.